welcome to another episode on the Move.Talk.Thrive podcast. Today I have a wonderful friend of mine, Michelle Kvello, joining me for an epic chat on all things finances. Michelle is the founder of Lantern Partners, where she works as a fractional CFO, supporting founders, CEOs of startups and scale-ups. Early in her career, she saw that while compliance was often covered, founders were missing the strategic financial partnership that was needed to truly scale and grow. That insight led to her to build Lantern Partners as that missing piece. Her team now supports clients nationally and globally with a flexible, predominantly female workforce. Named one of the top 50 women in accounting and top 50 small business leaders, Michelle is passionate about helping founders and women in business feel informed, empowered, and unstuck. I cannot wait for you to listen to this episode. Michelle brings so many insights. We cover what we should be looking at on a regular basis, how to prepare for uncertain times, and the mindset shift that it takes to really move from being stressed to being empowered with your finances. We are child development obsessed, business besties, and mums, and we're here to spill all our secrets.
We have a combined 30 years experience working with children, and each episode we will bring you up-to-date research and evidence-based strategies to set your children up to thrive.
I'm Lizzy Dawson, Australian exercise physiologist.
I'm Emily Mackey, Australian speech pathologist.
And this is the Move.Talk.Thrive podcast. Hello, Michelle. Thank you so much for joining me today. It's so good to have you here.
Hi, it's good to see you and thanks for the invite.
Yeah, I'm so excited to have this conversation with you today because I think allied health businesses are notoriously, I think, just maybe not on top of finances. And I think at the moment it's really, really important because we've got lots of changes. Everyone's feeling a little bit uncertain. So I think this couldn't have come at a better time.
Fabulous. Cool.
So, do you want to just tell everyone, I've kind of done your spiel, but do you want to just tell everyone in your words what it is you do?
Sure. So I'm the founder of Lantern Partners, and Lantern Partners is a fractional CFO advisory business. I'll explain the fractional part in a second, but what we do is we work with founders of startups and scale-ups, and we help them with the commercial and strategic finance advice. So we don't do a lot of the kind of day-to-day accounting and bookkeeping. We have a very small team that do that. And we're definitely not tax advisors. So what we're doing is we're working with founders to really help them work out the what now and the what next of their business, their numbers, and what the story of their numbers is telling them. We talk a lot about financial storytelling. And what that means is if you understand your numbers and you've done all the kind of cleanup of your numbers, they should tell the story of your business, and that should inform where you go and the decisions you make. When we talk about fractional, what that means is for almost all of the businesses that we work with, they don't need a full-time CFO. And CFO, for those of you that might not be, or it's a Chief Financial Officer. We're about the closest thing you can get to an employee without being an employee. So we're very involved with the businesses, very involved with the founders. So we're working with businesses anything from kind of half a day a week to 3 days a week, depending on how big the business is and what needs they have. So sometimes we think that we're working with founders that are looking to sell their business, for example. We're seeing a lot of that. We work a lot with family businesses, as I said, primarily founder-run businesses, and succession planning and thinking about what happens when they get towards, retirement age. What happens to this wonderful kind of practice or suite of practices that they've built up, and how do they manage that transition? So we also do a lot of that work as well.
Yeah, amazing. I think it's so great that we're having this conversation, but just what I've learnt from you in terms of that fractional setup, I guess, just because I think I would have always gone, oh, well, my business, I can't have a CFO, like that's, C-suite, I can't afford that. So I love that what you've set up with that fractional assistance, I guess. And so you're really like a strategy partner, like finance partner, I guess.
Exactly. But we do get very practical as well. So a lot of what we do with businesses and particularly kind of coming up to, payday super, which is happening
Mm,
in July. A lot of what we do is things like cash flow forecasting and helping our founders get that clarity about what's coming next.
hmm
So, when there are changes like that coming up, or when there are changes to, funding pathways, for example, and potentially uncertainty about funding pathways, we can help model out, well, hey, what if this happens? What does my business look like? What do I need to be prepared for versus if that happens? So
mm,
that's some of the more practical ways. So it's not kind of consulting from a distance or kind of giving you great ideas, but then you're like, okay, great, but I don't know how to do that. It's
yeah.
actually working with you to implement it within your business.
Yeah, amazing. Because I think I went to your what was it called again? Your
CFO
CFO
secret.
workshop.
Yeah,
Yeah,
CFO
CFO
secret.
Secrets. Yeah. And that was so great. I loved that day. But I was saying to you just before we got on, it's really good to know what you need to be doing. But then I think the tricky part is actually following through and doing that.
Yeah,
And so I guess firstly, why don't we talk about what business owners should be tracking, what they should be across, particularly keeping in mind in allied health at the moment, there's lots of funding changes
yeah,
with NDIS.
yeah.
So what is it that business owners should be across?
So the very first one is around just real familiarity with your figures. And I know that sounds really basic, but particularly with allied health businesses, and we work with a lot of purpose led businesses, and really most founders I know, there's a reason why they started the particular business they started. And it's not because they wanted to run a business. It's because they love the craft of what they do. They want to help people. There's a particular mission that they were drawn to kind of practicing and executing out of in the world. It wasn't because they really wanted to kind of run a business. And I think because of that, and because of some of the messages we get about finances out in the world, and I think particularly for female founders as well, is numbers are scary. I shouldn't talk about money.
Mm,
If I'm looking to make money, then that's somehow a bit kind of grubby or distasteful because you're supposed to be doing it for the good of it and the love of it and the worth of it.
hmm
And so that can sometimes translate into just having this kind of, I don't really want to look at it. It's kind of that 3 a.m. thing, when you get those
mm,
3 a.m. thoughts
yes.
and you've got the big scary monster under the bed. And in the morning, you look under the bed and it's like, oh, that was just a little dust ball. It's
Yeah.
kind of like that with finances. You get very up in your own head about how terrible it's going to be, or, how wrong it is, or how you don't really understand. So a lot of what we do is saying, not that scary. Let's break it down. Let's look at it. And looking, it's kind of a bit like exposure therapy, really.
Mm,
Just looking at your numbers, understanding your numbers, getting that habit in there of opening up your zero file,
mm,
looking at the reports your bookkeeper sends you, all of those kind of things. So that I think would be the first one.
yeah.
Um, the second one is really having clarity around your cash. Um, it's a little bit of a cliche, but there are plenty of profitable businesses every day that don't survive because they've run out of cash. Not because they weren't a successful business, not that they, actually weren't profitable, but because they hadn't managed their cash. So, profit is very important, and I'll get onto that in a second, but also understanding your cash is really, really important. Um, and the third one around profitability, we talk to a lot of founders about margin and the difference between gross margin and net margin. And I
Mm,
know we talked about that in the workshop that you were in as well. And
yeah.
for a lot of people in the room, that was a really new concept.
Mm,
Just as a very, very quick overview. So your gross margin is your revenue less the costs of delivering that service. So for a lot of allied health businesses, That will be the people within your business, you in a lot of cases, right? So those costs go into your gross margin. Sometimes if you're traveling to specific clients, that'll go into your gross margin. That percentage goes up and down with your revenue.
Mm-hmm.
So it's really important to understand your gross margin, and track it. And that's the one people usually don't track. And
Mm,
then there's your net margin, which is really the amount of money you keep in the business at the end of the day. And the costs that are taken off your gross margin are things like rent.
mm-hmm.
And those costs that just don't change. You could be making $100,000 or $5,000, but your rent's not going to change.
Mm, yeah,
And
yeah.
so that won't affect your gross margin, but it will affect your net margin.
Yeah. I think what we talked about in that day, which was kind of like a light bulb moment for me, was some of those costs of sales,
Yeah,
what they were. And I think
yeah,
that's where I was probably a little bit wrong. Like didn't have my wages in there. I think I had
yeah,
my wages down the bottom in
yeah,
the net in the expenses part.
yeah.
So what should be in that cost of sales, which that directly impacts the gross margin, right?
Yeah, so there is no completely black and white answer. There's no accounting standard that will tell you what's in cost of sales, okay?
Mm,
But it's very much an operational finance tool rather than a regulatory or compliance finance tool. But the kind of things that you need to think about, and the reason why for a services business, people, or at least some of your people, should go into cost of sales, is because they are the people delivering the service. If you work with a lot of casuals, they'll directly move in line with your revenue. If you have a permanent employee base, then it may not move immediately, but it will move. Say your
mm,
revenue halves, you probably don't need all those people. Your
yeah,
revenue doubles, you need more people to deliver those services, or you need them actually before your revenue doubles, right? Because you need them
yeah,
to deliver the service.
yeah.
So for professional services or businesses or allied health businesses, anything that involves people to deliver those services, that will be probably your biggest cost of sales.
Yeah.
Then think about all of the other things which are directly involved in delivering that service. Now, the things that won't go in there, because sometimes it's easier to talk about what won't go in
Yes.
there.
Yep.
If you have a lot of equipment that you need to
Hmm.
deliver your service, that actually doesn't go in cost of sales. Of course, you need it to deliver your service, but they are fixed. Like you would have to go and buy that equipment and you can't change it. You've got that equipment,
Mm,
whether you are at the current revenue levels, double or kind of half, particularly half, right? You've already bought that equipment. So they change much slower and they can change in step ways as well, but they're not a direct variable cost. And so, there may be other things in there that are specifically related to you delivering your service within your practice.
mm. And then what are the things that we can be doing, I guess, to influence that gross margin and then net margin? Like what can we be doing, I guess, to
Yeah. So
really influence them?
in terms of gross margin, actually the most important thing is to understand it
Hmm.
because once you get the right costs in there, you'll start kind of seeing that kind of move in line with revenue. Now
Hmm.
you can optimize those margins. So for example, if you're managing what we call the utilization of your
Hmm.
staff, so how much time they are actually in service to your clients and
Hmm.
how much they are doing admin or doing other things within the business. So monitoring that.
Yeah.
Some people work with timesheets. Smaller businesses, you can work. It's not ideal, but you can kind of work on what you see. The more
Hmm.
actual data as opposed to gut feel, the better.
Yeah.
But that's something that you can really do and work with. Um, in terms of your overheads, that's probably something that I would be looking at regularly, but it's
Hmm.
not something you're looking at every week,
Mm.
right?
Okay.
So your utilization rates for your people within the business, you're looking at that at least monthly. For the
Hmm.
fixed costs within your business, you can look at that quarterly, right? maybe every 6 months. And that's things like going through your subscriptions, work it. We all work with a lot of tech platforms these days. We have a lot of what you call tech debt within the business. Quite often, you, because your business has grown, you may be able to get onto a better deal. You may be able to go on enterprise value. You may be able to get volume discounts, for example. So that's, really important to be aware of. And equally, and we've all done it, paying for subscriptions that we don't use anymore,
Yeah.
or paying for a level that's higher than we actually need within the business today. So,
Mm,
those are some things that you can think about in terms of your operating costs.
yeah. And so if we were to kind of go, all right, there's one thing that can really make a big difference, would you say that that is looking at the utilization?
Yeah,
Yeah.
yeah. For any people business, actually looking at how much, and things like how much revenue each
Mm,
individual person generates. And that's not necessarily something you need to share with your staff, right? Because there are probably things outside of their control
mm,
that influence how much revenue they generate. Okay. But I think it's important for you as a business owner to understand that, because some of the things will be, how good that person is and how often they're asked for again and again for repeat appointments versus, maybe someone else within the business that has more spare capacity, potentially because of performance issues. But
mm.
that's something you as a business owner can look at and use as a tool.
And how do we work out what that number is that they should be earning? Like that, how do we work out how much revenue each person should be bringing in?
So look, there are some very broad rules of thumb out there in terms of like 2 to 3 times revenue.
Hmm.
But it is really, I think sometimes those broad brushstrokes can be unhelpful because they're a blunt instrument, right? If you're a business at a different stage of growth, for example, you're bringing on team members because you're backing yourself in terms of growth. You may have a marketing campaign out there. You may have opened a new practice, for example. Well, those people are obviously going to be generating less revenue because you've created that spare capacity in order to generate the revenue in at some point in the future, hopefully near future, but future, right?
Yeah.
So that nuance is important to be aware of, and why you can't just use blunt instruments
Mm,
like that 2 to 3 times metric. It's good to have as a target, but really it's kind of just those understanding your numbers and having the processes and tools so that also you as a business owner don't spend hours and hours and hours just looking over these numbers. It needs to
mm,
be simple. It needs to be, as far as possible in a dashboard. There are so many tools right now that you can implement within the business. Again, this is a really good use case for AI, and where AI can help pull this information from the different platforms and tools within your business
mm,
to actually look at that. It's one of the, I know I've used AI within the business to my business to look at
mhm.
that kind of thing. And it is a really good use case for it. So, I'm sure like, all businesses right now, the founders that you have within your network that are listening to the podcast, you're trying to work out how to be smarter about how you do things. And this is one of the ways that you can be smarter about how you do things.
Yeah, right. And so what AI, is there any specific AI that you would recommend we're using?
Look, I don't think you need to overcomplicate things. So
Mm,
you can use Claude to do it,
yeah.
right? You can use Claude to actually kind of pull out reports from your timesheeting system, from your revenue system, and look at those together, for example, and produce you a dashboard. That's one of the things that we're doing at the moment. It's experimentation. I think the best advice I was ever given about AI tools and platforms is to think of it as an okay grad, super keen,
Mm,
but not super smart.
yeah.
And so there is a level of time investment that you are going to need to invest in this
Mm,
um, to get the utilization out of it. And again, I was having this conversation just the other day, but just start because
mm,
there's a lot of utility you can get out of this now. And I know there are things that allied health businesses have to be careful about in terms of patient data, for example.
yep.
But if we're talking about things like employees and revenue, you're not going into that kind of detailed patient data.
No, yeah, you're just looking at the numbers, the
Yeah,
outcomes of it.
yeah,
Yeah.
exactly.
Yeah. And then with that utilization, so you said it's like how much of their time that they're seeing clients and doing revenue generating behaviors, I guess. Um, so with the admin and the non-client facing time, to get the utilization, do we take meetings and some of those unbillable, non-billable things out before calculating it?
100%.
Yeah.
Oh, sorry. No, 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 no. So you will take 100% of their time. And this is
Yeah.
also really important for setting prices as well.
Yeah.
Because what people tend to do is think about their cost base for their staff in terms of, you know, annual salaries, divided by 52 weeks, right?
Yeah.
But there is so much unbillable time that isn't waste, it's just reality, right? You've got to do
Yeah.
admin, you take holidays, people get sick, all of those kind of things that
Mm,
mean if you are absolutely knocking it out of the park and hardly doing any admin, you're at 80% utilization already.
mm,
So when you're thinking about the full cost of a staff member, actually you're not looking at 100% of their time as being able to be billable or 100% of
yeah.
their costs that needs to be recovered. You need to kind of gross it up for that 20% that, they're never going to be billable.
Yeah.
And it's unreasonable unless you're expecting people to do wild amounts of overtime, which obviously has other
Yeah.
impacts.
Yeah.
Um, you're just not going to get that.
Yeah. Yeah, that's right. Okay, so you would go total hours minus the non-billable, say admin, or
Yeah,
would you just
I tell you what I can do actually, and I know we didn't talk about this before, but I can drop a pricing calculator
oh,
into
that'd be great.
the show notes because then you can see typically the things that you need to kind of knock out, and
Yeah.
it will be things like 4 weeks of annual leave.
Yeah.
It
Yeah.
will be, well, first start with number of working days,
Yeah.
then you take out public holidays, then you take out annual leave, then give yourself an allocation for sick leave, even if it's not the 10 days per year people can take. What is a reasonable number? Is it
Mm,
5? Is it 4? Is it something like on average? And then you take out admin. So
mm.
really quickly you can see how that number comes down.
Yeah, yeah. I think that'd be really helpful because I
Yeah,
think if that's the most important thing, and I know my experience, particularly moving into an employee-based business, is something that I feel like I'm getting the hang of, but it's something, and I feel like exactly what you say, um, it becomes a little bit all overwhelming. And I think the cash management aspect and the revenue and all of this is probably the most overwhelming thing in business because
yeah,
it's just so much responsibility.
yeah,
And I just find myself like I have dabbled with the profit first and all of these things, but I still feel the same amount of stress. So I think sometimes I'm like head in the sand. Okay, I don't want to look at it. But I think just something quite simple that you can plug into each week and you kind of make it simple. What do we do when we look at it and it's not giving us a pretty picture?
yeah, yeah. And this is where we talk about the story, right? So once you
Yeah.
understand your numbers, do you like the story that it's telling you? And if you
Mm,
don't, how do you change that story?
mm,
Okay.
mm,
So there's a number, well, if you want to be really basic about it, there are only two levers within your business, right? Increase revenue, reduce costs.
mm,
But there are a variety of ways that you can do that. In your revenue, for example, one of the most common issues is underpricing,
mm,
either because you got your cost base wrong, so you think that your profit is actually higher than it is. So that's the first thing, and this is why kind of the pricing calculator could be quite useful.
mm,
Also, and I was doing a webinar with a Disability Tech Accelerator the other day where, he had a bunch of very early stage businesses, but in the disability tech sector, a lot of these businesses are started from lived experience. And there was, and often it's not verbalized, but they were verbalizing on the webinar. It's like, I feel bad for charging people for something that I know is so needed.
mm,
And it's really, really hard, and I get it. But the thing that I challenge them with, and I challenge anyone that's thinking like that, is just think about how many more people you are going to be able to help if your business exists, not forever, but your business exists. It's sustainable.
Mm,
You're able to grow and serve more people. You don't do that if you can't make any money. You'll
yeah.
go out of business. The stress on you as a founder will mean that you're not focused on all of those things that you got into business for, right? You need to make money in order to be able to fulfill your purpose. And I think that's a really, really important thing just to hang on to, particularly when you're feeling overwhelmed. It's like,
Mm,
there's a reason why I got into this. I need to run a successful, sustainable business um, in order to be able to fulfill my purpose.
yeah.
That's it at the end of the day, right? And that is why I'm looking at my cash flow. I'm not looking at my cash flow because I'm a rapacious, money hungry business owner.
Yeah.
Like, I need to alleviate the stress. I need to be a sustainable business. So pricing correctly is a really important part of that. Okay.
Yeah.
Um, and then with the costs, measuring things like utilization, actually looking at your costs.
Mm,
And you will quite quickly see when you start looking at your business costs, things that you don't need,
mm,
and the things that you can do without if you have to. Um, we all run households, right? You all have to do this for your own personal benefit. Your business isn't really that different,
mm,
right? You're
yeah.
constantly kind of looking through your costs, going, okay, I've got choices as to what I can spend my money on. What am I going to get most value from? And what am I not really, making the most of right now? It's
Mm.
that same principle you're applying to your business, but you do need to look at the numbers.
Yeah, for sure. And I think you've made a really good point about that feeling of feeling greedy and, like, and I just think health businesses really suck at this because we're like, this should, because we obviously value what we're doing, but into to the point that we think everyone should have access to it. And so I think there's a real mindset piece in there that and it flows from the business owner and to the employees. Because I know that anytime that I suggest or I'm like, no, 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 you charge for that travel or I kind of push back on it, the team are like, oh, that's really uncomfortable. So I think it kind of is on both levels as well. So I think that's one of the trickiest things in a health business. I
Yeah.
just did release a podcast yesterday, and it was about all of this NDIS stuff, which I want to talk about with
Yeah.
you. And we've basically been we're being gaslighted by the government in that they're saying providers are greedy, providers are fraudulent because they're setting up this narrative that when they take funding away, it's that the general population are going to be like, oh, providers are the bad people. And I think that that's just, they're so playing to our weakness because we already struggle to do
Yeah.
that. So I think it's a really important conversation to be saying, no, we can't continue. If you remove funding, we can't continue to provide this service. And then kind of go back to why our purpose and why we're doing this. And at the end of the day, if we're not charging what we should be charging and we don't survive all of these changes, then it is the families and the disability sector that is going to lose out. It's just it's a tricky one, I think, to get right.
Yeah, it's a really tricky one to get right. And it also kind of, it just makes the mental load even heavier, right? When you think, if
Mm,
I don't make this work, I'm letting all these people down that I'm trying to help. And I think the thing you almost kind of need to be saying and repeat to yourself is like, my profit fuels my purpose. Like,
mm,
can't you can't execute on your purpose unless you're making enough money to not be thinking about money every 5 minutes,
yeah.
right? How am I going to make payroll? How am I going to make rent? How am I going to make my BAS? How am I going to do all these other things, right? You need to have a handle on it so you can focus on your purpose, right? You want to be able to help all these people. Like, and I agree, like, that is what you want to do.
Mm.
But you're not going to be able to do that if you're not a sustainable business.
Absolutely. And so with these changes coming up with NDIS, I mean, it is really possible that a lot of businesses are going to lose quite a bit of funding. I think something in allied health that's tricky is there's a lot of um, risk, and this is something I know you talked about in CFO Secrets, there's a lot of risk that we don't have any control over. I can't
Yeah.
remember what you called them. Was it an internal and external risk?
Yeah, so controllable and non-controllable basically,
Mm,
because with the controllable, that's where you should be focusing most of your energy. The uncontrollable, you need to be aware of and you need to plan for. I think that the caveat with that, from what I was saying in CFO Secrets, because it wasn't specifically to allied health founders, a change like what's happening with the NDIS funding, you need to be across it and you
mm,
need to understand what impact that is going to have on your business. Now,
mhm,
with some businesses and some changes, it's just changes in timing of your
mhm,
cash flows. That is one thing. But if it is fundamental changes in the amount of dollars that you're getting through for each service or certain service lines just not being funded anymore, that is a different challenge because you are going to have to adjust your business model and your cost base
mhm,
in order to continue to be a sustainable business. Where it is, and I hate using the word just in any circumstances, but particularly this, if it's just a change in cash flow timing, it is just something you need to be aware of and you need to see how you can cover that gap because your ultimate cost, your ultimate revenue fund, your funding is not going to change. Therefore, your cost base probably isn't going to change, but there is a real need to cover that cash flow gap. So it's concentrating on two different things depending on how the funding changes are impacting on you. So again,
mm.
this is some of the ways that we work with our health businesses is to go, okay, what is your specific circumstance? And how do we model that out for your business?
Mm. So if we use my Kids Heart Pilates, for
Yeah,
example, we've got a high percentage of NDIS clients and it's in early intervention. And they have mentioned that they're moving children off the NDIS and that there's this Thriving Kids, which, is going to be rolled out in a completely different way.
yeah,
And there's literally no information. We cannot get any information. I have been on so many different group um, chats and networking. And it's all these business owners going, we're not sure how to prepare for this. The best thing that we can be doing at the moment is trying to influence like politics
yeah,
and,
yeah.
decision makers. But what can I be doing, I guess, now to prepare that if this funding is lost in the next 12 to 24 months, how do I make it through for, because the demand is still going to be there, right? So
Yeah.
now it's learning how we can work in this space that's just going to look quite different, I guess.
Yeah. And look, look, this is one of those really challenging moments for an industry, right?
Mm,
And there is a bit of a sweet spot in trying to model every potential scenario, which I don't ever recommend.
mm,
And being aware and across the changes and the likely scenarios
mm,
and modeling for a couple of the likely scenarios. But I think again, just how, because you don't, if the changes happen, what are the changes going to be? What are the timings going to be? How quickly is this going to change? You can't possibly scenario plan for all those what ifs and maybes. And I think, and very understandably, that is a very overwhelming situation to be in. It's almost like, in business and in life, like, I don't actually care how bad it's going to be. Just tell me what it's going to be, and then I can
yeah,
plan for it, right?
yeah.
Whereas if you're just in this, well, I don't know, it could be here, it could be here. That's a very difficult space to be. So actually, aside from the financial stuff, for founders that are in that position right now, and we talk to a lot of our founders about this, and I know it's not strictly finance, but supporting them through that uncertainty and, just making sure you're looking after yourself as a founder. There is enough stress on small business owners at the very best of times, but when your entire industry is shifting, you really need to make sure that you have the frameworks around yourself where you can actually make sure that you can do your best work and you can keep showing up and you're not going to get completely burnt out by this,
Mm,
which is a very likely scenario for a lot
mm,
of people, right? If you don't put those frameworks around yourself. From a practical finance perspective, getting clarity around your forecast based on what you know today. When things change, you've got something set up where you can make those changes in your forecast. But if you are waiting for the changes to happen in order to forecast, you're going to be caught behind
Mm,
when that information finally comes through. So what I would encourage you to do now is to set up those processes and frameworks so you're getting clarity. So you're kind of practicing that. I'm looking at my numbers, I understand what they mean. Oh, for every business completely apart from the NDIS changes, payday super's coming up. July is probably going to be a really uncomfortable cash month for
mm,
most small businesses everywhere that have any employees, right?
yeah.
So what does that mean for your business? What does that mean for your cash flow? That is something that you like. It's almost kind of like a practice for when things are changing
Mm,
with NDIS, right? Okay, have I set my model up? What is it going to change? And how am I going to manage through this period? Because again, that is just timing. Nothing fundamental is changing, but it is a big cash flow timing change.
yeah. So you said that you help people with the cash flow forecast.
Yeah.
What does that look like?
Yeah. So we help the businesses better basically set up a very simple cash flow forecast. And again, in the show notes, I think we're dropping the cash flow forecast template. So you
Yeah.
can do it yourself. Again, I would encourage you not to overcomplicate things. What you're thinking
Hmm.
about is what are my cash inflows and when are they going to happen?
Mm,
And what are my cash outflows and when they're going to happen? When are they going to happen? And so for the clients of ours that are working with one of our CFO team, they're doing that work for you. But really, you as the business owner kind of know a lot of this already. You know how regular and repeatable your revenue is. You know kind of what the average revenue currently have coming through the door, right? You know how much you pay your suppliers. You know how much you pay your employees. You know what your rent is. And then you know that whether you pay your BAS quarterly, whether you got monthly PAYG,
mm,
and then that change coming to super, which is going from quarterly to basically when
mm,
your payrolls are being paid. So sooner and potentially a lot more frequently if you've got weekly or fortnightly payrolls, right?
mm,
Um, so it's just mapping those out,
mm,
and just understanding what those timings are and how it's impacting your business. And there's probably a bit more complexity in terms of founders that have got multiple practices because you're running those almost all like little businesses, individual businesses, and they may have different cash flow inflows and outflows. So that's something that certainly one of the CFOs in the team can help you set up. And
mhm.
then for those of you working with a bookkeeper, your bookkeeper can often help you update that on a weekly basis or a monthly basis once it's set up.
Yeah, yeah. Okay, it's been so helpful. I definitely I'm feeling the pinch at the moment. I think
Yeah,
just with the uncertainty on top, and like you say, like on top of everything else, it's just kind of the last straw in an already fairly burnt out industry,
yeah.
I think. So yeah, your advice and wisdom is so appreciated. If someone's listening and they're feeling really overwhelmed, what are the three things that you would recommend they do this week?
So what I would recommend, say if you were starting from a complete place of kind of overwhelm and I don't look like looking at my numbers, start opening up your zero file or whatever finance system you're working with. You don't have to do anything with the information. Just look
Mm-hmm.
at it, right? Just look
Yeah.
at it. Um, if you're working with a bookkeeper, have a chat to them. I'm always
Mm,
amazed how many business owners don't talk to their bookkeepers. There is so much gold that your bookkeeper has because they see the numbers coming in and out every day. Go and ask them, if you were me, what would you be looking at right now?
mm,
And if you're working with a good bookkeeper, you probably won't be able to shut them up for a good hour because they have
mm,
been dying to talk to you about all this stuff, right?
yeah.
Um, and then oh gosh, third and fourth thing, maybe I'll cheat.
Mm. Ha.
Um, just get a view on your cash. Start understanding your cash, what your inflows and outflows are, and start having a think about your margins.
Yeah. Yeah.
Those are the first things we will come in and look at. as your CFO when we're starting with a business. Like, what's your cash looking like? Are there any burning platforms that we need to focus on before we do any of the fancy stuff?
Mm,
And what do your margins actually look like?
yeah. Amazing. Amazing. Thank you. And so if anyone wants to, we'll pop obviously your links to LinkedIn, Instagram, and your cash flow calculator or your
Yeah.
I can't remember what you called it, your little
Yeah, I'll
calculator.
put the cash flow forecast in there and also the pricing calculator, which
Yes.
will help you work out your utilization.
Yeah, awesome. And you help allied health businesses, small businesses, larger businesses, with all of this stuff, right? So if they want to get in touch, where's the best place? Is it the LinkedIn or?
LinkedIn, or I'll put my direct email address in there as well. Feel free to email me. But yes, I should also share a lot of information on my LinkedIn page, and I also have a newsletter as well. So, and we'll talk about things like things coming up that are changing from a compliance perspective, and just sharing things that we've seen from other founders, from other businesses, that could benefit you as a business owner.
Yeah, amazing. Oh, well, thank you so much. I'm very grateful to have you in my corner. You're a good friend and just, yeah, full of financial wisdom, which is amazing.
So welcome. It's been lovely chatting.